Hello, traders. It is 8 a.m. Chicago time on Tuesday, the 17th of September 2019. This is episode number 1597. Looks like we'll hit 1600 by Friday, just in time to close out the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a slight risk off sentiment. Crude oil's off about 70 cents or so from yesterday. Yesterday it hit a high, the WTI hit a high of 63.41, currently trading 62.16. The spike up in crude is not expected to be sustained. However, we did have an impulsive move up, a big gap. Crude close to close had a 6.5 sigma 20-day historical volatility sigma close yesterday, and that's likely to get a continuation. So the expectation, unless Saudi Aramco can get the facility back to producing 5.7 million barrels per day, I think capacity is at 7 million barrels per day, unless it can get that done. Um, we're likely to see another attempt at that high from yesterday, at least. In any case, the money is flowing to safer assets. We have the euro taking a pop. The market's really mixed. I mean, yes, crude is down 1.1% or so, but the risk assets are off more than the safety assets. The 10-year note is up four big ticks. The bonds are up three ticks. The pound's unchanged and the bund is unchanged. The rest are red. Gold is off $1.30. So you could say that it's somewhat mixed in terms of the expectations today. Uh, overall, overall, the expectation is for a continuation lower in the indices. We'll look at that in a minute. What is likely driving the market today? What is the theme of the day? Um, the German zoo came out. This is a major sentiment indicator out of Germany. Came out a lot weaker. Came in at negative 19.9 versus negative 15 expected. This is the lowest reading since 2010. Um, the Eurozone release, I believe, also came out weakish. Let's see, the Eurozone zoo came in actually a little bit better, negative 22.4 versus 32 expected. But the key headlines here that are driving the overall theme for the day in terms of news is the Brexit plan is going to the Supreme Court in the UK, and a decision is expected on Thursday. The US and China are setting a date for mid-level trade talks in preparation of the October key meeting. And also the Saudis are saying that they have evidence that the attack was launched by Iranians from Yemeni territory. The president of Iran said that this attack is in retaliation for what is going on in Yemen, and Yemen is defending itself. The Yemeni vice president came out and said that they do not condone the attack and that these attacks should not happen from Yemeni territory. So that is a nice little fire that's about to hit some gasoline probably and cause a bigger explosion in the area unless cooler heads prevail, and there aren't many cool heads in charge right now. So the market is going to look at that situation and consider that there may be a counterattack on Iran, which would cause even further a cut in crude oil supplies. Iran sells to China, and so on and so forth. The macro picture there is quite mixed. It's just a mess. In any case, that's the theme. Just watching out for news events coming out of there. Looking at the calendar, there's really nothing that is in terms of a high tier release, scheduled release today. We do get industrial production in about 10 minutes in the US. This is a low tier figure. We get NAHB Housing Market Index at the top of the hour at 10 Eastern. ECB's Kerr is expected to speak at 1:10 Eastern. And then after the close, we get API crude oil stock change. And this evening at 7:50 p.m. Eastern, we get the balance of trade of Japan, which is a key figure for that economy. Let's take a look at what we expected yesterday versus what we got. Can you tell me if the sound is good, low, high, too hot, too soft? Um, I'm not sure. I'm getting messages that may be a little low. Um, Here's what was expected yesterday. These are the key plans. The primary scenario is a responsive move higher. As you can see on your screen there, it's the green. Line. So this line here, primary is responsive, and as I talked about yesterday, 5,000 and 3,004, 3,005 is expected to be the area of initial resistance, and then I'm expecting the market to turn back around, move back through the open, and push lower. The expectation is 29.92. So two prices to keep in mind: 3,005 right here in the stock zone, 29.92. Okay. Um, Here's what actually happened. Let's expand this a little bit. We didn't see very much action yesterday. Scroll back. All right, here it is. We open 29.97 open auction, responsive in boxes essentially. There's your first box, break higher, second box, break higher, third box. These are all zippers and consolidation boxes essentially. Look where it went, 3,005 and a quarter. Could not touch or breach the prior low at 3,575. What does it do then? It goes right back to the open and pushes to where? 39.92 stock, 29.92 stock zone, stops at 29.93 and a quarter. So it misses the target of 29.92 by 5 ticks, and then finds its buyers and moves towards the middle where the point of control, VWAP, which is a cyan line, and the mid of the session all converge into the same spot, leaving us with a normal variation, a normal day type, and leaving us with a normal day type and a completely balanced profile on very low volume. I think the volume yesterday was only about 670,000 contracts or so. It's about half of what we would expect it to be, especially since we're in rollover. We expect volume to be actually higher than normal. But we're still in rollover. There's volume still in December, and it's quickly moving September, and it's quickly moving to December. But what we left behind yesterday is a completely balanced profile. Where's the point of control? 29.9975, right on top of that millennial figure of 3,000. Essentially, the market has checked above, checked below, and just settled on the figure. And what this does is it sets us up for a coil or consolidation, and likely a strong move from here, especially if we end up today making another balanced day. The delta yesterday was mainly negative. Well, it popped above the zero line for a bit, but overall it was lackluster. And of course, we couldn't count on the delta because of the rollover. We can't count on volume to be normal because of calendar spreads and auto spreaders and so on. People rotating their positions. It's hard to read the volume. However, the pace of the roll. In fact, one of our head traders posted it with a comment, so I'll put that up here. The pace of the roll is such that, here it is. This is the pace of the roll right now, and it is actually the roll is taking place faster than the first standard deviation or the norm, what we would expect to be normal. You can see it lagging down here. Hang on white doesn't work. You can see it lagging down here, and then you see it accelerating and getting above, and it's about 92% approximately eyeballish, 92% complete. The exchange expects 80% of the volume from one contract to roll into the next. That leaves 20% expiring as hedges or whatever. But overall, we're almost there. By tomorrow, the roll is likely to be done and complete. It'll probably be right in here. Watching this chart, this is a chart that's generated by the CME group for the ES. Specifically, it tells us that the pace of the roll is ahead of what we would consider to be normal. So that's just another input that tells us that, hey, we can use our volume delta. Normally, we refrain from referring to volume delta until the roll is done. But if the roll is completed early, then we can get back to the normal way we do business. In either case, we have a normal distribution with a valid value high, value low. The one thing to note, the overnight high is higher than yesterday's low. The overnight low is higher than yesterday's low. The overnight high is yesterday's high, higher than yesterday's high. The market did make an attempt to breach and go into Friday's balance, but could not sustain it. And then the overnight session just sat sideways. Again, the expectation the expectation was to move back to 3005, roll over, and move to 2992. The actual is we went to 3005 and a quarter, and we rolled over kind of in an ugly way, and went to 29.93 and a quarter. For those of you who are critical of putting up those expectations or scenarios, this is where they matter. Once we get into the trade, we want to hang in there for our key target, or as much as the market can offer, but at the same time, taking profits along the way to mitigate risk. This is why I recommend that if you're going to trade the ES with a small account, don't. Instead, trade the MES, which tracks very closely using ES charts. Do your homework, your analysis, watch the ES, execute in the MES, but trade three contracts. Trade three contracts. That is 30% of an ES contract, and it allows you the opportunity to scale out and so on. I did a webinar for Futures IO back in late April ahead of the launch. And of course, Convergent members, we have there's a separate webinar that I did there. In both cases, I provided a trading plan. Convergent members got a more detailed trading plan template for three lots on the MES. And the reason we do that is because I cannot predict that the market will actually get to the target that we expect. And so we take something along the way and let the runner run to the target to give us a good profit factor or risk factor, rather a risk factor or risk return on the trade. If we don't do that, then we're likely statistically to end up losing and terminating. Here's the overnight session. Pretty ugly profile. I mean, the distribution of volume in the overnight session is just awful. 199,000 contracts traded, so slightly high, and slightly high, and it's not great for rollover in the fact that we've got this news event that should we would expect to cause volatility, and we end up with this boxy profile. Pretty much for the entire night, we have the point of control right here. We had the point of control right here on top of the millennial figure, on top of yesterday's point of control, and it shifted down as the market moved down. It shifted down here to 29.96 and a quarter, and we have a box profile with a weak low. The high looks pretty good, but the low looks weak, and we are below mid VWAP, yesterday's close, and so on. The inventory overnight is mixed to slightly short. There may be a small attempt to move back to around 29.99 on the open, but overall, it just looks weak, and it looks like there is no consensus overnight. It's just drifting up and down all around. Here's what the order flow looks like. This is ctbookmap.pro. You can see that it's very representative of what we see in the overnight session. Just very, very choppy offers, liquidity. See these programs running in here. Just same program, just choppy liquidity, a lot of black, dark matter, dark space. Um, just a lot of blackness all around, and there's nothing that's definitive until you get into the 29.92. Remember that number from yesterday. Until you get down there, we don't really have stable liquidity. And on the top, stable liquidity is against a key reference area, the weekly close, Friday's close. We've had stable liquidity up there. Other than that, it's just been chopping in and out, in and out. It just isn't a very good looking chart here or map of what has happened overnight. In fact, I don't have very high hopes, and I hate to burst anybody's bubble. It is Tuesday, generally the most volatile day of the week. Tuesday and I believe Wednesday are. Um, but I don't expect very much, so this may be a silent day, relatively silent day for me today. Again, I will refrain from taking anything on in the first 15 minutes until we can see who's in control. But overall, not impressed with how the market is setting up, just structurally and from an order flow perspective. Let's take a look at what we're expecting for today. Remember, there's no commitment, even though risk is off today. We're in a risk-off environment. There's no real commitment on either side, to be honest with you. I mean, there's just not. This isn't a market that's really committed. On the open, on scenario one, I'm expecting an open auction that responds back into the 3,000 area, 29.99 or so. I'm looking for an impulse down that pushes through yesterday's low, has some liquidity, so we expect it to chop around in here, attempts to go up, and then overall starts to make a turn and move lower into the next space. I don't expect it to go far. We have this high volume node from last Wednesday. This high volume node has a high volume price at 29.89 or so. We may see a bounce here. It's not enough for me to put a stock zone there. Probably can use a stock zone. I'm seeing some confluence here a little bit, but this is what I'm looking for. So this figure here is 29.89. All right. So that's what I'm looking for on scenario one. Scenario two, open auction that drifts lower, pokes through this 29.92. Oh, oops, wrong color. Apologize. Getting ahead of myself. Scenario two, open auction that moves lower, grinds lower, stabilizes, impulses up, comes back into the overnight point of control and starts working its way back into balance with yesterday potentially pushing higher and challenging yesterday's high, but overall expecting it to fall on the second scenario. The primary scenario is much more likely to play out in that we're likely to move back towards that 3,000 magnet before we fall off. Remember, Tomorrow is FOMC. Tomorrow is FOMC, and the market's likely to just go into this kind of holding pattern, just kind of flying in circles above a certain price range until it decides to come in for a landing or not tomorrow. So there isn't a huge incentive for the OTF to make a commitment today. Just remember FOMC 2 p.m. tomorrow. Today, by the way, I just want to make a reminder for Convergent members. Today we have a trade talk, and make sure to show up for. We'll talk about market structure and set up for our webinar for FOMC tomorrow. We're not having a study hall on Thursday as usual because we want to trade the FOMC instead. So check the member calendar, and we'll go over that. Should be pretty interesting. I'm going to look to set it up live and so on. I'll leave you with that. Good luck, everyone. I'll catch you tomorrow morning. Take care.